Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, in the past week or so, we've been highlighting the oversold conditions in the market, everything from breadth, positioning, put to call ratios, and even the S&P hitting oversold conditions on the RSI, and we were looking for a bit of an oversold bounce with some headline relief. And today, that's exactly what we got. The S&P up almost 3% and the Qs up over 3%, the best trading day for 2026 so far. And in addition, we also got the VIX coming down at 17.5%, and market breadth saw some significant improvements today with the percentage of stocks above their 20-day EMA coming up 63% on the day from the low 20s all the way up to a very cool 43. And of course, that was because of the news headline that we had yesterday evening in terms of Trump telling his aides that he was willing to end the war without opening the Strait of Hormuz. And that carried into the bullishness this morning, and what really sent us into turbo mode over the course of the early hours of the afternoon, right about there, and then follow through the close was this one right here. Iranian prime minister coming out, or president rather, saying that Iran is ready to end the war with the US, but wants guarantees. Just that news enough, and how heavily everybody was positioned to the downside was enough to create a relief rally. Now, of course, much of this is probably short covering, but we also might have a little bit of retail FOMO towards the end of the day as well. So the main question remains, was that the absolute true bottom? Or is it just a dead cat bounce, and might we be looking for another leg of downside? As we know, the issues aren't yet resolved. No ceasefire, and the price of the barrel of oil still above $100 on WTI. Of course, today, guys, we're going to talk about all that in today's video. Number one, we'll go through the news headlines of the day and some other market statistics that would be important to our analysis. Number two, we'll go over the indexes and the sheer size of the move and determine whether or not this is a true low or rather just a tradable bottom for the time being. The S&P, the Qs, and our other minor indexes will be the subject of today's analysis. Moving on after that, we're going to get into our big tech names. Big tech having a very nice rally recovery day. Is it still a good time to be looking for some trades in these names, and which ones? But also, is it still a good time to be buying the dip on these companies even after a big day of rally recovery like this? Are they still in decent locations for long-term portfolios? And at the very end of the day, we will focus on the biggest gainers and losers of the day. There were a couple to the downside here, but a lot of very bullish action to the upside, of course. So today, we'll be focusing on the size of the moves in some of these companies. The reason that you would focus on the size of the moves on these guys is because on a big day of relief rally like today, you really want to pay attention to which companies outperform the indexes, which companies have been the subject today of heavy buying, meaning at the end of the conflict, because we know the conflict is not over, right? This is a sign of what companies people will want to buy the most, because when you have other companies on a day like today, where everything's up and the S&P's up 3 and Adobe is only up 0.8, well, it kind of lets you know which companies people really want on the other side of the conflict and which companies may still have their struggles ahead. So we'll take a look at that at the end of today's video and relate it all together. And that's going to be it for today, guys. So let's jump into the action, shall we? The S&P up almost 3, the Qs up 3.4, and the heat map looked pretty good. Very bright green. Hope you got your sunglasses on. Big tech and semiconductors coming back in a wild fashion. We know that the damage has been done in the past 4 days, and one day of bounce does definitely not make a trend, but it's a nice bounce attempt by the bulls for sure. Financials also participating for the most part. The banks having some really nice relief rallies after today. Healthcare, which was also in oversold conditions, got their own respective bounces. Consumer staples still lagging behind. Energy stocks down on today's news. That's fairly obvious as to why, right? Just a cooling down of potential tensions. And industrials, which also were beaten down in the most recent few days of action, benefiting from some nice rally recoveries as well. So overall, not a bad heat map, all things considered. Moving on to your one-day relative, you'll see that even better. Technology led the pack. Most sectors were green. The only one lagging behind was energy for clear reasons, obviously, right? On the 1 week relative, after such a big bounce, how many sectors are now in the green on a 1 week relative basis? Well, not the entire market. Technology, as a matter of fact, is still the worst performer. Yes, after all of this movement by technology, it is still your worst performer on a 1 week relative basis, which just goes to show how much damage was really done since last Thursday when we had the liquidation break. The liquidation break, I'll remind you, was under the premise of troops on the ground and extending the conflict longer than the administration's previously established timeline of 4 to 6 weeks from the start of the conflict towards where they wanted to end it. And that's when you started kind of price in the elongated effects of an elongated conflict and synonymous with some recession indicators right there. So just keep that in mind. Fear and greed index right now at a 15. Yesterday, you remember we printed a low of 8, which was super, super soft, and also led us to believe that any headline relief whatsoever could translate into a very nice bounce from oversold conditions, with a mix of short covering and also some possible retail FOMO. As we know, retail recently has been selling securities very heavily and has been very heavily bearish in terms of just sentiment on social media. And obviously the actual media has been quite bearish as well, with good reason though, because there are some very big implications from this conflict in the event the conflict should continue for, another month or so, right? So moving on to some of the news headlines for today, guys, just to recap exactly what happened. Yesterday evening, we got this headline right here, which led to some bullish action in the futures market. The prices held overnight, and we started off with a very decent day in the morning. The gist of what President Trump was saying last night was the following statements here. The details of ending the Iran war, even if the Strait of Hormuz remains closed, was that Trump and his aides assessed that a mission to reopen Hormuz would push the conflict beyond his timeline of 4 to 6 weeks. Trump also believed that the U.S. should achieve its main goals of destroying Iran's navy and missile stockpiles. Trump thinking he can wind down current hostilities while pressuring Iran diplomatically to resume the free flow of trade. And then lastly, if that fails, Washington would press allies in Europe and the Gulf to take the lead on reopening the strait, U.S. officials say, and he said as much very early this morning. At the same time, all those countries that can't get jet fuel because of the Strait of Hormuz, like the UK, which refused to get involved, I have a suggestion for you. Number 1, buy from the U.S. We have plenty. And number 2, build up some delayed courage, go to the strait and just take it yourselves. You'll have to start learning how to fight for yourself. The USA won't be there to help you anymore. So basically putting the burden of reopening the strait on other countries. Obviously, this might just be political posturing for the time being, Trump trying to kind of rally other G7 nations behind to aid in efforts in reopening the strait. But the market didn't sell off on this commentary right there. What the market wanted to avoid was what the market tried to price in last week, which was the deployment of troops to manually open the Strait of Hormuz themselves, as opposed to ongoing diplomatic efforts, which caused this little bounce that we had about a week ago at that time. Moving on a little bit further, later the afternoon, the big reason for the rally was that Iran said it was ready to end the war as well, but it wants some guarantees. We know that their demands are very steep, but after the close right here, and surprisingly, the markets aren't responding to it that much. You can see the after hours markets right now still green. Look at this comment right here. A few hours later, Iran's foreign minister, just now on political peace talks with the U.S., we do not have any faith that negotiations with the U.S. will yield any results. The trust level is at 0. So there's a lot of he said, she said. Negotiations are clearly happening behind the scenes. No formal ceasefire has been reached. The Strait of Hormuz is also not formally open just yet. The threats still remain, which is why the price of the barrel of oil still remains quite sticky. However, as I said, right, today should not be construed as an absolute bottom. It should just be construed as a bounce out of oversold conditions, as we had many indicators across many different things. I mean, you guys remember how many charts I've been showing you, right? From fear and greed, from the breadth, from AAII, investor sentiment being super negative. Then we went through like dozens of charts in terms of retail volumes being at local lows, right? The put volume being at very, very high levels that usually lead to a bounce. And we also had 0% of financials above their 50-day EMA, which rarely happens. We also had the foreign investor sell-off in Asian emerging markets because of the energy crisis over there. We had the S&P or fear and greed index on a historical chart showing that every time we creep down into low single digits or rather low double digits or single digits, usually very close to a local bottom, keyword local. Money flow also very, very, very soft right now. Everybody selling. Tech premium being the cheapest it was in relation to the SPY since 2019. We had this one too. S&P 500 tech sector next 12-month price to earnings ratio. Even though the tech sector is generating the biggest profits and the biggest earnings gains for the market, they're being priced at the exact same as the S&P, almost very close. And then you had the NASDAQ composite down in 10 of the last 11 trading weeks, which also is the higher end of what you would tend to get on historical fronts. All of that considered, you also had Hedge funds being net sellers. You can see peak of the selling right now and the 2025 April lows, and then also back in COVID of 2020. Very rare to get everybody so bearish at the same time. All of those were perfect catalysts. And even if you get this piece of news that you guys may not believe in, right? If you're wondering, how did the markets react to this? Even though there's no formal ceasefire, it's just because, guys, the market price is in the worst case scenario immediately, overshoots to the downside. Just as on positive news, it can overshoot to the upside, right? And then when you get something less than the worst case scenario, it's very quick to respond. Shorts are able to cover as well. Now, in terms of some news headlines from today, because those are all from previously, right? But we talked about yesterday. You got a couple more slides here for you guys. Let me just get my tabs because I've got a million open them right now. The Strait of Hormuz is not open and the damage is still ongoing, right? So here we have U.S. industrial gas supplier Airgas declaring force majeure, telling the customers it would only meet up to 50% of their normal monthly helium demand amid the Iran war. We know that helium is very important from anything from, MRI machines and obviously crucial to the semiconductor process. Well, the world is facing a significant helium shortage amidst the Strait of Hormuz's closure, which has limited 30% of global helium supply, etc., etc. So the ongoing situation, Asia is still facing an oil crisis. Helium and other agricultural products have seen their prices increase, and the shipments, such as fertilizers through the strait, are being held back for the time being. So the damage that is being done is very real, and we haven't solved it. But as we always say, right, sometimes the markets will find a local low or even the true low before any of that damage is felt in the next few months of time, and then it will reassess the situation at that moment, right? Moving on a little bit further here, we have Warren Buffett, so changing gears a little bit from the tone of the market. Warren Buffett giving a 1-hour interview today to CNBC. It was really nice to see him out and about, still his good old self, obviously much older than some of you may remember him when you started following him 10, 15 years ago, right? But very nice to see him still taking interviews, enjoying his retirement as on the chairman of the board, no longer CEO, right? Some of the main takeaways from Warren Buffett today is that he's still very active as chairman, being in the office every single day, making only one tiny new purchase recently. He did make a pretty decent one last week, buying Google around some of the lows, 180 roughly, I think is his cost basis. So decent there, and trusting CEO Greg Abel with the reins. Apple still remains his largest holding, and he said something. He sold it too soon. I sold too soon, but I bought it even sooner. So I guess it's not that bad. Remains Berkshire's #1 position, commenting that he really enjoys Tim Cook's management of the company. He's open to rebuying a lot more if the price is right, but still says it's not very attractive in this market. Referencing also their massive cash fortress, Warren Buffett says, listen, I got a lot of money on T-bills. I'd much rather put it in a company, right? He was talking about, I can deploy $100 billion, but I don't want to have it in cash. I'd rather put it in a company, but still being very patient, seeing there's not that many great deals in the markets. And also referencing, when asked about the current conflict and the current drop on the S&P and the Qs, what did he have to say? Warren Buffett, man, he's been through a few of these. The current volatility is nothing compared to past 50% drops, which occurred 3 times in his career. And I've been kind of trying to reiterate that on the channel as well. Obviously, now with the flow of information, everybody has information at their fingertips, and the media is very quick to build a bad narrative, and people are very quick to become geopolitical experts, supply chain experts, oil experts, military strategists experts, right? So many different types of experts at the same time, and people's views on the market tend to get very lumped up together simultaneously, right? However, the current volatility that you're seeing in the market, indeed, in relation to even last year's tariffs, is not that bad. In relation to COVID or even some sell-offs in 2018, also not that bad. A very decent environment, but for many people who've entered the markets recently in the past 2 years, you guys may not be used to it as much as Warren Buffett. Not many people have his experience, not myself, and probably not a lot of you guys that are watching these videos either, right? Now, also in terms of the economy and global risks, he says that he wishes that the Fed would target 0% inflation instead of 2%, and his one main concern remains the banking system fragility right now. Overall, decent interview by Warren Buffett. I haven't been able to watch all of it, only certain excerpts, but I will be catching up on it over the course of the weekend. So highly suggest that you guys also watch Warren Buffett, because we're not going to have him around forever, right? So you may as well take his guidance and his wisdom while he's still here. Moving on a bit further here, we got NVIDIA making another big purchase today. NVIDIA investing $2 billion into Marvell because the TAM for networking and custom silicon is entering an inference boom. NVIDIA is becoming the platform layer for a more distributed AI factory architecture, increasingly built around its networking fabric. This goes on top of many other investments that NVIDIA has made recently, investments into Intel, investments into Synopsys, CoreWeave, Nebius, Nokia, Lumentum, which was recently $2 billion there as well, Coherent, and now, finally, Marvell. Total investment portfolio for NVIDIA stands at about $14 billion right now. So definitely not a large, definitely not a large batch of purchasing by NVIDIA, but just goes to show, right? They really want to partner with the people that they want to establish close relationships and really shore up some of the supply chains amongst each other, right? So that being said, very interesting news, and Marvell did respond extremely well to that. And you might remember Marvell has been one of my top picks, guys, ever since we started off this year, right? Marvell was one of the semiconductor companies that hasn't really benefited from the explosive growth that many other companies in the sector have had. In spite of having a relatively low valuation, Marvell still one of my favorite picks, guys, into 2027, 2028, 2029. Moving on a bit further here, we got OpenAI announcing that it's officially closed their latest funding round with $122 billion in committed capital at a post-money valuation of $852 billion. Sam Altman saying, some updated guidance here, we're now generating $2 billion in revenue per month. That's not bad, $24 billion per year. Unfortunately, they're still not profitable. ChatGPT has more than 900 million weekly active users and over 50 million subscribers. Search usage on the platform has nearly tripled in a year, and our ads pilot reached more than 100 million in ARR in under 6 weeks. So there you have it. Another IPO listing possibly for this year, right? 122 billion in cash raised so far. Moving on further here, this is a chart that I want to show you guys. Smart money versus dumb money. We brought this one up many times last week as well, and basically just highlighted a few key metrics here, right? What you want to notice is, what is the smart money doing? Basically institutions, and what is retail doing? Because we know that institutions are far slower to respond to headlines and overall sentiment than retail is, right? Institutions have the benefit of having loads of cash and a long-term time horizon. Retail is more focused on catching quick trends and basically is very quick in terms of turning their positioning around from bullish to bearish and then bearish to bullish, depending on the prevailing market environment, because of what I was saying, right? The information flow now. Everybody has a mobile phone. You get the news headlines every single day. It can scare you out of your positions or possibly make you FOMO back into positions, right? Institutions don't really do that. They move their money a lot slower in and out of the market. So pay attention to the crossing points right here. You'll notice that back there in 2025, when we had the tariff sell-off, you'll notice that during the tariff sell-off, institutions had loaded the boat and retail had dumped the bag. And then progressively as the markets rallied, well, institutions sold to retail who were buying at a higher cost than them. And then institutions kind of just sat back here for a while until we had some pullbacks later on in the year, October, November, at which point retail once again started to offload their positions to institutions, which gladly took them as you had that extra leg up here, end of December into January. Well, institutions, once again, my head's behind it. Institutions here, where my mouse is, about in the middle of the chart. That cross right there, retail bought it up, institutions sold it off to them, and institutions have been patiently waiting. And then as soon as this correction started happening, especially the war events, right? What did the institutions start doing? Well, obviously, this little box is kind of in the way right here. But if I move my head over again, you'll see they were at the low of the print. Retail was at the high of the print. What has retail done? Ever since the war started, sell stocks, sell stocks, sell stocks, sell stocks. What has the institutions been doing? Well, this infographic kind of hides it a little bit, probably on purpose. But you can see, right? Oops, you got the extra cross, and now institutions have been net buyers throughout this entire sell-off. And what has retail done? Obviously, panic sold at the fastest pace since the April 2025 Liberation Day, right? So once again, I will just ask you the question. I'm not going to judge, right? Which party do you guys want to play with? Do you guys want to play with the big boys? Or do you guys want to kind of listen to the prevailing sentiment on social media from a lot of retail investors that move their money very quickly in and out of the market, right? So you can do a little bit of both. You can be trading the markets, but also if you're a long-term investor, which is what we say on the channel, right? If you're a long-term investor, you should be doing what the institutions do. And whenever you have big weakness like this, you should be buying, right? If you're trading the markets, well, maybe you should be doing what retail is doing, not liquidating every single position, but as we talk about on the channel, right? Using the strategies that are favorable in these market conditions. High VIX, big red days equals selling put options under the market or selling covered calls on some of your winning positions, right? Not the time to be buying options necessarily, but the time to be selling options. And lastly, but not least, one of the big reasons that contributed to our short squeeze today was definitely the CTA short positioning, which we talked about in yesterday's video. This was published by Goldman Sachs. CTAs, you can refer to them as, well, there are still some human money managers referred to by CTAs, but they usually have positions on futures markets across many different assets, right? So as you can see, big short positioning here by CTAs. A lot of algorithms are included in this calculation as well, right? They usually move off of price action and momentum. They are not really concerned with the long-term outlooks of the market. They want to capitalize on flows and momentum and price action. You can see here that they dumped it so far down, which did lead to our liquidation breaks on the indexes. And as a result, it led to net short flow in the markets, a lot of people retail, and even hedge funds being net sellers as a result of that heavy CTA positioning to the downside. A lot of algo momentum, guys, right? And it's so many stocks. And then when it becomes not favorable for them to have a risk reward position to the downside, they are very quick to reverse that positioning, which is why you saw a lot of short covering today, a lot of algo activity, and possibly at the end of it, a little bit of retail FOMO as well. Those are your main news headlines and main statistics that we covered once again. I went through a ton of slides right there as quickly as humanly possible, but just trying to explain the context of the rally, right? The context of the rally matters a lot. And if I just wanted to establish a quick little conclusion right there, have any of the conditions for market full recapture of all-time highs, have any of them been met in terms of the Iran situation? There's still no ships through the strait, and there's still no ceasefire. You're seeing a very nice relief bounce. It doesn't mean that this relief bounce cannot lead to this eventually being the absolute true bottom. The thing is that you need one of these two conditions to be met, right? If you keep this market bounce alive long enough for you to actually be able to pull out of the Iran situation, agree to a ceasefire, or have ships resume through the strait, then this may very logically be your absolute true bottom. If not, you could possibly see some very volatile revisits of some of these low positions, which is why I say, if you're a long-term investor, it's very simple. There's tons of companies that you can keep accumulating with your paychecks every 2 weeks. That way, if you stay down here or move lower or move sideways, you don't care. You're basically accumulating your favorite companies at multi-year lows of valuations for many of them, from Visa to MasterCard to, Mag 7 companies, so many high-quality companies trading at multi-year low valuations. And if you're trading the markets, I mean, every Sunday, I put out the top 5 options plays, right? Yesterday was a great opportunity with a VIX super high, oversold conditions on the S&P to go shopping with short puts way below the markets. And on a day like today, what we did in the Discord group, what do you think we did? Just take a whole bunch of profits and then just wait for more declines. And now at least we have some form of a tradable bottom to be selling our next batch of short puts below. Very simple, right? So that's everything for your introduction. Hopefully you guys enjoyed that. Now let's get into some charts. Okay, so talking about the good old S&P 500. Well, number one, guys, today is the last day of the month. And we were talking about yesterday, if they closed those monthly candles at the lows like that, it would have been pretty nasty in terms of some heavy follow through to the month of April through the 26th. They closed it literally right at the 12 EMA. So not too bad. And we also created a lot of space off of these recent lows, which does mean that it's a tradable bottom. The bounce size right now on the fibs is over 61.8%. So if we have further improvement in terms of headlines and whatnot, you can see the bulls make an attempt to reset the daily uptrends. Now, into tomorrow, you would not be surprised, as you're seeing in the after hours market right now, you would not be surprised if a lot of retail gets FOMO from this move, thinking they've missed the bottom, right? So you would not be surprised to see some price action continuation into the whole 652 to 659. That does not mean you can't get rejected from there and revisit some of these lows into support, 642 down to about 633. So essentially what I'm saying is the price action has not changed. You are still in a daily downtrend. It's a very nice bounce, but if we're looking to put on trades to the upside with size, our conditions for doing that have not been met. Number one, you do not have a new daily uptrend, which would confirm the bulls are back in control of the short-term timeframes, establish some very nice weekly lows, and possibly lead to a bit more upside, or at least give us a nice stop loss level on a daily uptrend to trade with a stop loss below and then go for expansion. Criteria number two if we don't get the price action back, would be the actual ceasefire or pulling out of the whole Iran conflict. So none of the conditions to put back size into our long bias trades is currently available on the markets right now, but it is a very nice bounce overall. Nice to see the bulls participate so heavily. It's a lot of that was short covering, obviously, some retail participation. But as I said, you wouldn't be surprised to see some follow through. You just still got to be very nimble with your trades, right? Still an environment where you would be waiting, because it's not going to be the last red day, right? You still be waiting for some red days to sell some put options below the markets. And at least now we've established a low that's pretty far away, right? It's going to be tough for the bears to just swallow this entire move unless you have big degradation of the Iran situation overnight or into the next few days. Moving on to the QQQs, same concept. The bounce size is fairly good as well. From the most recent lower highs, it's a 618 bounce. Into resistance, however, 581 down to about 575. Like I said on the S&P, you would not be surprised to see some retail continuation into tomorrow, thinking they've missed the absolute true lows. But we know that it's not so simple, right? You need to change this trend. Many times throughout this downtrend, we've had very decent bounces, only just to be unwound once again. So, not going to put my foot on the gas just yet in terms of long-sided positioning. I've been accumulating for the long-term portfolio during this entire consolidation phase. I've been having a lot of fun selling put options under the market, but still no long-biased short-term call options or leap call options, not just yet. I want to see good recapture of the price action with some daily uptrends or an end to the entire conflict. That's what allows us to put on a bit more size behind our trades. So we'll be hunting for possible higher lows and higher high sequences, maybe establish some of that more favorable pricing. Keep that in mind. But as of right now, decent bounce. And once again, closing the monthly right at the 12 EMA as opposed to in to the sequence lows, which would have just led to possible the full band-aid rip, right? Full liquidation break down to the 26th through the first week or two of April. So keep that in mind. At least now we get a little bit of a bounce relief rally, right? Which kind of alleviates some of the positioning, heavy positioning to the downside. You wouldn't be surprised if more short covering and retail FOMO is had tomorrow, which does lead to a bit of continuation. Moving on to XLF right now. XLF also very nice bounce, but we've had some nice bounces only for them to be unwound in recent times. So once again, the trend is your friend. And as of right now, the daily downtrend is just that, a downtrend, right? So give me the trend change, then we can say, all right, great. We have a weekly low established, and then we will look to reestablish the weekly uptrend because we've lost everything, right? Still, at this point in time, you guys know I've been referencing financials as one of my nicest pickups for long-term positions, whether it's Visa at some of the lowest valuations you've had in a long time, MasterCard, American Express, some of the banks such as Bank of America, beautifully into our support lows down there, or even other companies, legacy companies such as SPGI, right? A lot of great deals across the financials landscape right now. However, it takes a while to turn around, right? This is like turning around a cruise ship, essentially. When you have big monthly consolidation, you have big weekly downtrends, it's going to take a minute to turn this entire trade around. We know that there's still some private credit headlines circulating around right now, but it's a start. If we get another move to the downside here, I'll once again be looking to sell some put options either on XLF or on specific financial companies that are into support levels and at structural lows. Moving on to XLV Healthcare. XLV also responding from the daily oversold conditions. I mean, XLF was oversold, right? The Qs were oversold. SPY was oversold. So it was coming, right? Multiple sectors being oversold and heavy positioning to the downside. You're just asking for a short squeeze on any bullish headlines, even if you guys think that the headlines shouldn't deserve a move like this, right? It's just how the market works sometimes. They'll price in the worst case scenario, and if they get a bit of relief, it's enough for people to lighten up their short positions and look the other way temporarily. XLV Healthcare need to take out this most recent lower high, 147. If you do, that's equal lows roughly and a new daily uptrend. And possibly we might be able to recapture here the 200-day EMA. What you really want to see healthcare do is reclaim this entire zone that they broke below, which would be 148 down to about 145. Give me a nice recapture of this, and maybe we can play this with some weekly local or some daily and weekly local lows and try to play some uptrend momentum into the second half of 2026. Moving on to semiconductors right now. Beautiful bounce on semiconductors, but still a bounce in the context of an overall daily downtrend, right? So it's a nice bounce so far, like the S&P and the Qs. They are at a 50% bounce right now. We flush below a small level of support that we had. It's not the biggest level, but it's the closest one that we did have right now after this head and shoulders full flush down, right? Weren't able to get it done, the bears, because of obviously the headlines today. If not, they probably would have had a great chance to follow through. That being said, pay attention. If you get the lower high, still open. The door is, that being said, the door is I don't know why I said it like that. The door is still open for further downside moves into a roughly 350 down to about 325, which would be a clean break to the 200-day EMA and a clean breakdown to the 12-monthly EMA. So semiconductors not looking too bad, but you guys know the drill, right? I'm only playing certain semiconductor stocks, not all of them, right? The ones that have great risk to reward. So names like LRCX and ASML that have ran substantially from their lows and now have relatively high valuations historically, those I'm not playing. Micron, we'll talk about Micron at the end of the video because even though Micron's ran a ton, the valuation still makes sense. Micron's trading still very cheap, but I'm kind of focusing on companies that haven't ran at all recently in the last few months, such as NVIDIA, such as Marvell, which is just breaking out right now. Beautiful backtest and breakout on Marvell, and also names, of course, like AMD, which haven't really done much in the better part of the last 5-6 months, despite having beautiful growth ahead of them. Those are the names that I'm focusing on individually within semiconductors as opposed to playing the entire ETF. On to the Russell right now. The Russell also having a nice 3.5% bounce off the lows, but still no trend change. You'd like to see them kind of climb above here, this big box of resistance, 251 to 245, and give me the trend change. Then we can make some attempts perhaps on some of the smaller cap names that we pay attention to on a weekly basis. Still a weekly downtrend and still monthly consolidation. Nice backtest in the 12 EMA. Remains to be seen if this is going to be the true lows or if it's just a head fake and we move a little bit lower, right? So I'm not playing the Russell overall. I'm playing individual thematic small cap names. We'll cover a few of them towards the end of the video. And that's pretty much it for your analysis, guys. I mean, XLP, right? XLP, there's a reason that this one didn't bounce so much today. Why? Because some of the reasons for the conflict, right, is the fact that if oil prices stay high for a longer period of time, the inflation threat is still very real, right? Even if you solve the Strait of Hormuz tomorrow, oil prices will still be high and supply chains have been disrupted and input costs for some of your legacy staples have now been, are now going to rise in the future, right? So that's why you'll notice which sectors, when you see the bounces like today, right, you got to focus on which sectors are getting the most lift. Meaning, if you end the conflict, which sectors would tend to have the most amount of momentum on the other side of the conflict? And it's very clear, right? Technology, especially large caps, and semiconductors. The rest of everything not doing too well. Consumer retail, surprisingly, getting a nice pop off the bottom right there, trying to go for the daily uptrend shift, but still very low, out of oversold conditions there too. And consumer retail, just because it's been so oversold, there's so many names that are down tremendously right now. Not one of my favorite trades, but you could have a bit of expansion here, guys. It's just that consumer retail, I mean, it's just not my favorite one, right? You can clearly see what the market wants on the other side of this conflict. It's Qs and it's semiconductors and also small caps, which was the name of the game, by the way, before we got into the whole conflict. Arguably the Qs, no. Mag 7 was selling off because of the, the lack of free cash flow and the CapEx and all that good stuff, the SaaS apocalypse, etc. Large cap tech has been out of favor for a while, but specifically semiconductors and, semiconductors and certain parts of the small cap trade were very favored. Utilities, not that great of a move today. Overall, though, still some phenomenal opportunities in the utilities companies altogether. Talking about companies like, companies like NextEra Energy, right? I don't know why I didn't get NextEra Energy looking pretty good here for some volatility to the upside. And even Vistra. Vistra's come down a tremendous amount, but I still do believe it is a very potent buy in the markets right now. So I'm playing utilities exposed to data centers. Real estate, 1.54%. Not a bad day for real estate, but once again, the key here is not to establish whether or not today was an absolute bottom. What you really want to pay attention to is what sectors, and within those sectors, which names are getting the most amount of lift today. Now, the amount of lift could be a combination of retail FOMO and short covering, but that's what you got to look for, right? Where do the shorts have the most amount of money to cover? Which sectors that have they been shorting the most aggressively, right? And which ones are they not relenting on? So you can clearly see the weak move on XLP right now and the weak move on real estate. I mean, XLU utilities doesn't really have any shorts. It's just consolidated slightly. But of the sectors that got brought down a ton because of the conflict, interest rates, inflation, you can clearly tell, right? Which ones are getting great lift and which ones are not. Real estate will still be tough because of interest rates and overall inflation, putting pressure on yields. And lastly, energy. We were talking about this yesterday, right? XLE. So XLE came down and tagged their daily 12 EMA, which has been the regime that the stock, or rather the ETF has been under since the start of the year pretty much. So just watch this. If you get more follow through on a day like today and XLE pulls back too much, just be mindful, right? It can lead to weekly consolidation overall, guys. And weekly consolidation would be natural. At that point, you'd be targeting this level right there, which is why I say, right? You got to have some stop losses in place for these trades, because if it unwinds, it's going to unwind quickly. It won't mean that it's not going to be for a buying opportunity down the road. It just means that the sectors ran extremely hot. It was already running hot into the conflict. It caught a second batch of legs into the conflict. And now there might be a little bit of profit taking if you do see some eventual rotation back into the sectors we just talked about. So that's everything for your overall market rundown. The VIX down 17%, still very high though at 25. So you guys know what to do. Tomorrow, if you find any of your favorite names that are red in spite of the recent bullish price action today, or maybe just little retracements to the downside, pay attention to it. You might be able to find some good discounts selling some put options into the market. If not, selling some covered calls on things you might have recently been assigned that you want to wheel out of, right? Getting some very good premiums on the covered calls, so pay attention to those. On to our commodities analysis. Gold having a very good day, guys. 3.5% on the day. So once again, gold and silver, I mean, compare them and contrast them, right? Gold was up 3.5% today. What did Bitcoin do? Bitcoin's only up 2. Okay. So I'm just saying we can once again use the strength that gold has been showing to once again see that what do people really want if you get a resolution to the conflict? Well, the big money and what retail probably wants as well is still gold. That's why it had some very nice strength in relation to some of the other sectors in the market right now. So gold, very nice move. Daily uptrend is set right now. There is a bit of a long trade, which you talked about yesterday on the break of the 45.80 highs, which was a long, right? With a stop loss below there because you don't want to be unwound as part of a continuation of weekly downtrends. So you got to trade it with a stop loss, but there is possibly a nice trade to be had right here into previous highs of about 49,500. We'll see if the bulls can get it done. Maybe they have to two-step this process as well, just a sequence, kind of like they did right here, right? Just a sequence of higher highs and higher lows. Not too bad on the price action for gold, though, and nice MACD currently curling over. So gold, not looking too bad at the current moment, and even silver also not looking too bad. New daily uptrend, and that's something big, right? Because we know it's been about a month that they've been stuck in a daily downtrend. So even silver trading, giving you a tradable bottom right there at 67. Next target to the upside would be 83, and then obviously 88, 95 would be the extra take profit zones if you're willing to take swing trade longs on the metals. But you can clearly see silver was up 7% today, right? So clearly, if you do get further conflict resolution or further bullish continuation in the markets, well, now you have your lead bulls that people want on the other side of the conflict. That's what today's price action should show you. This should be the takeaway. At least you are prepared that even if you have further downside moves on the indexes, etc., right? At least now you know, get a pen and a pad, or just, take from what I'm saying in the video, right? Now you know on the other side of things, when conditions are alleviated, right? And the pressure of downside is alleviated, you know where people want to position the most and what may stand to have the best subsequent rallies back into local highs. However, Bitcoin, you can't really say the same thing, right? Bitcoin's still trapped in a daily downtrend right here. So clearly the opposite of regime of gold, right? Gold, daily uptrend. What's Bitcoin doing? Still stuck in this daily downtrend. So no movement in crypto whatsoever. Still very slow. Not going to spend too much time on it, right? Still at the bottom end of your weekly move. Any further moves to the downside on crypto, 60 down to about 55. And on Ethereum, same thing, right? Big resistance ahead of us, 25 down to about 2100. Any moves lower, if this is indeed a weekly bear flag and there's just no love for crypto for another, let's just call it for the foreseeable future, right? Down here, 17 at about 1,300 bucks is your range. So still no swing trades to the upside. Notice how we can derive some nice swing trades to the upside on gold and silver, but we can't really do the same on Bitcoin because you don't have the daily uptrends, right? The bulls haven't shown us anything. So it's up to them to prove it to us. And if they do, you'll see me talking about these in a more favorable fashion. For now, though, not much. Now, that's everything for your overall market rundown. Hopefully that all made sense. Very important segment of the market, right? That index analysis, and you're seeing where is the strength going, okay? When you get some relief in the markets like this, those are the sectors that you would want to continue to participate in as the year progresses. They are the exact same themes and sectors that we talked about from the entire start of the year. They were strong leading into the conflict, and now they're showing you that possibly towards the other side of the conflict, they would also remain strong. That's where most of the big money is flowing. Moving on to Apple right now. So our big tech names. So number one, Apple. Apple with a very decent bounce today, but still not clearing our local highs. 257 would be a nice break, resetting the daily uptrend to the upside. and consolidating this area of support. A little bit of a swing trade opportunity here on Apple. I would not go too heavy on any of these swing trades though. They're just in the event that you get further follow through. Clear stop loss area would be down below here, 245, and clear take profit would be out here at about 270. So the risk reward right now is somewhat favorable. If you do want to swing trade these markets, not too bad in terms of risk reward on Apple. It's holding up the levels perfectly fine, but in the event that we just collapse a little bit further, you might find me selling some short puts down here, as we've been saying, 235. And I do agree with Buffett. We've been saying that on the channel for many months at this point, right? Apple up here for me is just too expensive to add to the long term. You might see me add a little bit of a nibble here. The last time that I bought Apple was in the lower 200s after the Liberation Day lows. Moving on to AMD right now. AMD up 3.77%. Decent, but still trapped in kind of the gulag of price action. Below resistance, 230 down to 216, and also above support, 190 down to 178. Very easy right here on AMD. Long-term accumulation, still a very good price because the long-term thesis is very much intact. The stock is trading relatively cheap in relation to its forward earnings projections. And in the event that you break down towards more lows, toward the support level, I'll do exactly what I did yesterday. Basically sell puts all the way deep down into there on AMD, as it is something that provides very good premiums in the process. Onto Amazon right now. Amazon up 3.64%. Amazon's held up well, despite having a daily downtrend, right? Definitely not as steep of a decline as Meta or Microsoft, right? That being said, nice little move here, 3.64%. Now they still need to change the trend, which means that for now, for me, no swing trade longs on Amazon just yet. However, if we do pull back a little bit more, I'll be doing a bit of the same that I've been doing over the past few weeks, which is just selling some put options whenever we get the opportunity in the low 190s. Amazon's still one of my favorite companies in the market, but we also know that it's been a monthly downtrend now for a while. The forward projections for the company in terms of price to earnings, it's a 27 at a 1.35 peg. Still a very manageable position, one of my favorite companies in the market, and they should be one of the biggest beneficiaries of AI over the next 3 to 5 years. So long-term positions, I'm a big fan, or selling puts under the market. No swing trades currently for me. Moving on to Google right now. Google, nice pop, 5% on Google. Google was getting really oversold there on the daily, coming right into the 200-day EMA and barely holding on to this micro level of support that we had last December. So Google still in a bit of a daily downtrend, although the bounce is a nice bounce, 5%. In terms of the measured move here, it's only a 38.2% bounce, right? So the bears could very easily send us back to the lows. No swing trade action on me for Google right now, and also no long-term position buys. We barely almost grazed the 12 EMA. Not good enough though. At about 280, Google is still one of the more expensive Mag 7 names. And that's a lot, right? It just means that the other ones are just so cheap, right? Google, 24.45 in terms of forward price earnings, but it's a 1.63 peg, right? You know, if you look at Amazon, it's a 1.35 peg. That's why I love the peg ratio. The peg ratio allows you to compare different companies that have different EPS growth rates on a common basis. And Google, de facto, is one of the more expensive peg ratios out there in the market. I'm not selling any shares, but I'm also not adding any. The only way that I'd be adding to Google would be, sub 260 to about 245. If I don't get it, no problem at all. You guys know on the channel, you guys probably have a ton of Google shares because I talked about it for like 5 months down there as one of the best buys in the market. So nothing for me just yet. Moving on to Meta right now. Meta with a very substantial bounce, 6.67%. However, in the context still of this daily downtrend, in terms of the size of the retracement, you'll see right there that it's almost a 618 move. Decent bounce off the lows, right? But have we really solved anything on Meta's price action? No. So any further revisits here upon rejection from resistance, which is 604, down about 560, any moves lower, I'll once again be benefiting from selling put options below the lows. And also, I'm still, even on a day like today, right? Anything below 600, guys, on Meta is a very decent pickup for the long-term portfolio. If you want to hold this company for the next few years, around 570 where they currently trade, it's a 19 forward price earnings and a 1 peg, one of the cheapest Mag 7 companies in the market. Moving on, but still, for me, no new swing trades. If you want me to do swing trades, you're going to have to give me at least a daily uptrend and give me a better local tradable bottom, right? The only reason why Meta, the only reason why I can say on Apple it's the case, Apple never lost a monthly. Many other companies here, Amazon lost the monthly, so no swing trades, right? Meta lost the monthly time frame, so it's tough to establish a tradable location without a daily uptrend. And also Microsoft is another one that you can't really, well, you can if you really want to, right? And establish a stop loss below here. It's just not prudent Apple has the better price action out of all of them. That being said, moving on to Microsoft, Microsoft was up 3.12% today. It doesn't look like much in the context of this big old sell-off right down there. It is just a 35% move from your most recent local high, right? Daily downtrend, as you can see on the price right there. So that being said, not a tremendous bounce on Microsoft, but it's something. They were deeply into oversold conditions, below the weekly 200 EMA. You guys know the drill, right? First time in like 15 years they've been below this level by that much. First time in a very long time. This is Microsoft's worst quarter, okay? The worst quarter on Microsoft since 2008. Literally, look at this quarterly candle, down 23.5% on the quarter. You would really have to go back, guys, to 2008 to find a quarter like that. As a matter of fact, this one right here, October of 2008, to find a quarter where Microsoft dropped as much. Obviously, different times back then. The valuation on Microsoft, very fair. So the way that I'm playing Microsoft, still selling put options below the market on any further weakness into this massive support area, which is basically 2021 highs, price action from there, tariff lows. So I'll be selling some put options, no worries. And also adding to my long-term share position, as Microsoft is still, in my opinion, one of the best buys in the market because of this valuation crush. Moving on to Netflix right now. Netflix also responding well to today's price action, 3.42%. Netflix trying to go for it. Daily uptrend right there and trying to cross the MACD as well. So we know that this entire consolidation period, as we were saying, was just the market hunting for weekly higher lows. We will see if they're able to establish this and push higher. The next area we'd be looking for is probably about, 107, these highs right here, 109, and then into resistance 110. So it's roughly around that range right there. Not too bad. This was a nice bounce. This is what I mean when you're looking for time frame reversals, right? So now Netflix has a tradable low. Okay, you have the new daily uptrend as part of a weekly higher low attempt. So clear stop loss area for a swing trade there, and the upside target would be all the way up into the upper end of the range, right? So let's just say something like this: tight stop, and then all the way up here about 110. That's not a bad risk reward ratio. It doesn't mean it's going to follow through, because if the markets unravel, Netflix can just undo this move and move lower. But that's why we go for risk to reward, right? We look for opportune setups, and then we look to kind of trade them. So that's everything on Netflix in terms of adding. It's not a bad buy, but I'm just a better fan of adding under 90, because under 90, the valuation really makes sense to me. And that's literally where I added the last time it was down there. We spent a whole bunch of time when Netflix was down there saying that it was one of the better buys in the market. Hopefully you guys are able to pick some up. Moving on to NVIDIA right now. NVIDIA, a 5.6% move, still in the context of a daily downtrend, still in the context of a weekly downtrend, and still in the context of big monthly consolidation into the 12 EMA. NVIDIA is very simple. NVIDIA has been a very nice DCA trade in the low 170s, and we were saying buying NVIDIA shares for long-term here all the way through the next touchdown there, 150. This was the pocket that you wanted to participate in overall. And if not, wait for big red days on NVIDIA and sell puts below the market. So we've been having a lot of fun over the past, 2,000 years on NVIDIA. Every time it pulls down into the lower 170s, I've been selling puts below support. And when we really drifted down into here with the high volatility, you could find 150 strikes into the 150s. No-brainer position in my opinion. That being said, NVIDIA right here at, it's 175, but give or take, right? Trading around a 24 price to earnings and just below a 1 peg. Still phenomenal value here on NVIDIA. I've been buying more and more, looking for the eventual upswing on this one. Tesla up 4.64%, but also no trend change here, right? So the chart just doesn't look the best on Tesla either. Big sweeping downtrends overall, and you're going to need a much better bounce to convert this into the daily uptrend. That being said, rejecting from support right now, 360 down to 340. Weekly, though, still remains in a bit of a weekly downtrend, and the monthly also into big monthly consolidation. Tesla, obviously not one of the better valuations in the market, not even close. The only reason you would be buying this one is if you plan to hold it for the next 5-10 years. With the ever-growing rollout of Robotaxi, Optimus, and everything else that they're doing at the same time, right? So moving on to Palantir right now. Palantir up 6.35%. Very nice, but same as some of the rest of the names you go over, right? They had the daily uptrend and they got the flush. This was a big flush, right? So keep in mind that now we got to recapture a few things. You got to recapture the support area. You're almost through it. 148 down to 140. They flushed it. If we can get it back and reset the trend, that will look good for some follow through, right? As of right now, just a bounce out of oversold market conditions, right? That being said, on the weekly time frame, Palantir is also looking to reestablish a weekly higher low and go for the trend change. What you need to see first is something like Netflix, though, right? Give me a daily uptrend in the context of this weekly pullback, and at least then you can have a bit more confidence on Palantir to position to the upside. So that being said, to be looking for something like this, right? Then they give you the break. then we can set the stop loss below there. The entry would probably be there on the change of the uptrend, and then we'd be targeting uptrending locations to the upside, right? As we were kind of targeting back here when we talked about it, saying it looks good for the breakout, put a stop loss below there. Unfortunately, I took this trade, got stopped out. Not that big of a deal, right? Just got barely stopped out on this trade. Now I got to wait for the price action to confirm a better entry once again. If it just blasts off like this, well, sadly, there's no trade, but suffice to say, not a bad day on Palantir overall. And for me personally, if we get any more red, you guys know I've been saying it on the channel, I'll be selling puts down here. And also, if we come down there, low 130s, that's the time that I add to my Palantir position in terms of more shares. A couple more here. SOFI, 4.82% to the downside, but same concept, right? The bears are just so strong on this name. Big daily downturn right now, so you got to give me a trend change. Give me a chance on SOFI. If not, I'm not really willing to participate to the upside just yet in terms of swing trades. So daily bears fully in control, bouncing out of oversold conditions right now. The weekly still in a massive downtrend. Weekly 200-day EMA, although it's not, it's a relatively new indicator from 2024. You don't have that much history like a Microsoft or something like that. Around 15, the valuation still does support long-term buys for the next 2, 3, 4 years if you're going for the expansion of the business. And even short puts under the market also into weekly oversold conditions and this big area of price action, right? Huge area of price action. Not a bad proposition, but still, swing trade longs or things of that nature. I wouldn't really get ahead of myself. There are better charts out there. And as I said, right, this at the current stage is just a relief bounce for the time being. Moving on to Uber right now. Uber up 2.89%, but we know it's in the context again of a daily downtrend. In the event that we want to change the trend, well, you got to give me a daily uptrend. And then we know, okay, maybe we got equal lows right here on Uber, and we can possibly go for the trend change. Not enough price action for me to confirm that just yet, although they do have a bit of bullish divergence here. Higher highs on the RSI, lower lows on the price. In the event that we reject from this big area of resistance that we're currently still kind of clipping into to the upside, 81 down to about 70, and we just reject and move lower. Selling put options down here. It was on the top 5 options on Sunday, right? In the lower 60s, and also adding to my position, low 70s through 60 is the area that I want to add to my long-term shares, right? That being said, you're at like lows of the past 2 years, and at 70 or lower, valuation is quite compelling. It's a 20 forward price to earnings. It's a 1 peg. So I'm looking for all these companies trading in around 1 pegs because I know I'm really getting a good price for the forward growth. And last but not least, Taiwan Semiconductor. So TSM breaking down, and now the bulls. Very nice move, very nice bounce. Right? If you take a look at the size of this bounce here from the most recent higher low, or lower high, excuse me, it's a 618 bounce. So the bulls have to convert. Either you go through the top and convert like this, sit on support, or if they want to two-step the process, you got to protect these lows. It's a very nice bounce, but 1 day's worth of bounce is not enough to change the daily downtrend that we've been in for the longest time at this point. Well, not the longest time, but since, February pretty much. Weekly consolidation, still this awkward head and shoulders pattern on the chart right there. And on the monthly, we just haven't pulled back enough to really pique my interest on TSM. Not that the valuation is expensive or anything. It's currently trading for a 24 and a 1.26 peg. It's really not that bad, right? It's just I need a little bit more consolidation, line up the technicals and the valuation, and I will play. For the time being, I'm focusing on other things, not adding any TSM shares up here just because most of my position was built in years prior at much better cost. So I don't need to add to TSM up here. It's not a screaming buy or screaming discount in my opinion. And also swing trades, I'll need to see a little bit more in terms of price action follow through if you want to get me interested. That's everything for your overall market rundown. Hopefully you guys enjoyed. Now let's move into the biggest gainers and losers of the day. Okay, so the focus of today's analysis on the biggest gainers and losers, guys, is I want you guys to focus on what names got the most amount of bounce today from the news, right? Because I'll compare and contrast a few things. Because yes, some of these names are high beta, and that's to be expected, but they are also in favorable themes that we've been discussing, whether those are the energy plays such as Bloom Energy or possibly like a GE Vernova or something like that, right? Those, and you also got some drone plays up here. You got some semiconductor names. You got some neo cloud providers like NBIS, APLD, CoreWeave, other things like that. Yes, those are high beta, and also SanDisk and Micron, some of the memory names. Those are high beta. Those have very good themes. We know that. We've been talking about it all year so far. But what I want you to focus on is that not even things that are not that high beta did very well today. Look at the bounces on big tech. Most of big tech followed in line with the S&P or the Qs or better. At the same time, big tech is not very high beta, right? But it lets you know that there's interest, a lot of interest in these names if you get a recovery. Additionally, look at the banks, okay? The banks also because financials were so sold off, a lot of interest here coming back to the banks, and the banks are not high beta. The reason that I bring this to your attention, guys, is because there's one sector here that a lot of people have been focusing on recently, right? That's been out of favor since February for very good reasons, right? Look at these names, okay? Look at Salesforce on a day where you have such big pushes on even the banks and the S&P, right? Salesforce is only up not even 1%. Where's ServiceNow? ServiceNow is down on the day. And what about Adobe? On a day like today, after Adobe is so crushed at such a cheap valuation, are people jumping on this opportunity, even though it trades at a 10 forward priced earnings in oversold conditions and at the lowest price it's had since arguably 2018? Well, the answer is, for the time being, no. So if we are focusing on speed and momentum, do we want to be in some of these legacy software names? No, is the clear and cut answer, right? And I always say this, it's not that some of these names are not cheap. They are cheap, but we've went over the risks many times. The seat risk, right? The pricing power risk, the earnings visibility risk, and the ever evolving risk that AI is the worst it's ever going to be, right? We're not saying that people are going to vibe code their own Adobes or Salesforces or ServiceNows. We're saying that should those companies go back to trading at 25 times earnings or not, right? So this price action today once again shows you what the market wants in the event you get resolution of the conflict. And what does the market want? Well, obviously, it wants some of the neoclouds, right? Whether it's APLD, whether it's NBIS. NBIS is my bigger position. Whether it's NBIS, whether it's CoreWeave, and even good old little IREN. IREN was up 8% after diluting their shareholders a ton with that $6 billion at the money offering in the $40 range. Even that was higher today. Now, obviously, we've broken down on some of these charts, right? NBIS, in my opinion, still holding up the best, which is why we've been saying recently I've been accumulating as much as possible into the 80s, and with yesterday's move, did a nice short put down here into the mid 80s as well. The market wants those. What else does the market want? The market is still very interested in the space names, whether it's ASTS or Rocket Lab. Look at these moves. Yes, they broke down. A lot of the market broke down over the past 4 days. But on a day like today, are these only up 0.5% because nobody wants them? No, people are coming back into these trades at a very fast pace, right? So the space names as well getting a lot of love today. Some of the semiconductor names, such as Marvell, such as Broadcom, right? Broadcom, 5.5%. A lot of the semiconductor names, Broadcom, NVIDIA, AMD, Marvell. Also some names to pay attention to. Data center connectivity plays. ANET, after being down a while, did the market come back and make an attempt? Yes, they did. 5.7% to the upside. Names like Vertiv, even Vertiv got sold off aggressively recently. What happened? They recaptured all of yesterday's move to the downside, 7%. So data center connectivity, still very popular, right? At the same time, you have some photonics names. It was a bit of a mixed bag today. AAOI, I mean, this one still in a consolidation phase, but by large and by far, when you look at the rest of the sector, right? Coherent up 8.5%, Fabrinet up 6%, right? GLW, Corning, right? They were also up 5.77%. So it lets you know that that environment is still very strong, right? And even some other names that got sold off as part of the software narrative that probably shouldn't have been sold off, such as Shopify, which is a name that I've been focusing on. They got very nice pops today, right? So they just got sold off with the rest of the batch, but also today got very nice pops. Even some of your ad tech names, right? Like AppLovin, very good valuation down here, quite interesting. Names like Reddit at the same time, nice pop here, 8.47%. This one's been wildly out of favor, but on a day where it really mattered like today, was there interest? Yes, indeed there was. On names like even Zeta, a smaller ad tech / marketing platform, 7.5%, but not all names were built equal on a day like today, right? Not all of them ran. If you move a little bit further here, some of the drone names like KTOS, these have been thrown out, right? But not only them, the entire defense space sector has been thrown out. But what did it do today? Nice bounce off the 200-day EMA. This is the ETF. It's been nothing but down since the conflict. Curious, now the conflict found some headlines that it liked. Well, defense sector got a heavy bid out of oversold conditions. So the drone names, we've been saying, right? Decent range to be acquiring some of these names. AVAV, a little bit down on the day today. Ondas also responding with some very nice price action today. So anything military oriented in terms of future, the future of the market, whether it's, drones and defense, because we know if the conflict has taught us anything is that drones and defense will be very popular. AMPX that does batteries for all these drones. They had a very nice move today, 14%. They held up the levels really good, but when we got the liquidation flush the last 4 or 5 days with the SPY and the Qs, even that got thrown out and tossed out to the side, right? So what I want you guys to focus on, names like Bloom Energy as well, right? Bloom Energy and GE Vernova, they kind of go hand in hand, very strong rally recovery. So it goes to show what the market wants on the other side of the conflict. Even a name like Symbotic, chart doesn't look too bad, right? It's looking not too bad. Robotics names as well, doing fairly well, right? Many things, even the copper names today, such as, well, you know, some other names like Celestica. Celestica is pretty cheap right now as well. And even some other names like, you know, some other names that have been sold down recently. Where is it right here? I can't find it, but what I'm looking for is, oh, it's right there. ALAB was also up, even though copper's been thrown to the side with the advancements in photonics, right? So clearly the market still wants to participate in a few key themes: space, drones and defense. Then you have the energy trade, data center energy trade specifically, right? Then you also have data center connectivity, photonics, liquid cooling, even the data center builders themselves, right? Like Fixed Comfort Systems had a very good day today, right? So these are still some of your market leaders, and also the memory names. SanDisk responding well today, 11% to the upside, and Micron responding very well to the upside despite breaking down below a key area of structure. Be curious to see if Micron can recapture this and reset some of the daily uptrends, put an end to this weekly consolidation, and resume the big monthly push to the upside, right? And even EWI, Korea, right? Broke down recently with the SPY and the QQQs, flushed the level, came down and down and down, established, right, a local low for the time being, giving you some form of a tradable bottom if you're going for further follow through to the upside or further monthly follow through, even though it hasn't pulled back, you know, to the optimal level just yet. It's just saying, when you see a day like today, where is the money flowing into? Yes, you had relief bounces on a whole bunch of names. You know, even Lululemon was up 5%. Would I be buying Lululemon as part of the retail recovery trade? No, right? But still, it just lets you know that the themes that were popular before the conflict are still going to be ones that are the most popular after the conflict. We can cherry pick certain names here and there, like Lululemon, which was up today, right? 5% better than the SPY, and possibly other names that have been in unfavorable sectors just because of the sheer amount of destruction that's been had. But I still wouldn't be buying those. I'd still be focusing on the themes that we just derived together, right? So obviously I'm not going to go through every single one of these charts. It would take absolutely forever. But if you're focusing on those themes, guys, right, into, you know, into the next, let's say 6 to 12 months type of thing, that is usually where you're going to find the most amount of speed. Even some of the critical minerals names, right? Critical minerals is arguably going to be the slowest theme of them all because it takes them a while to ramp. But on a day like today, right, USAR could have just been down, but it's not. USAR, UAMY, even some of the uranium names like LEU, not a bad day today. UEC, not a bad day today. The nuclear ETF, NUKZ that I like to track, 3.64% to the upside. So you can see some nice participation in all these clear themes, right? Energy, drones and defense, right? For the whole military aspect, data center connectivity, basically data center infrastructure, and semiconductors, just to name a few, right? So keep that in mind, but also the financials as a runner, just because of how oversold they were, very decent propositions, very good opportunities there within. I'm not betting all sectors that have been beaten down. I'm not betting consumer retail. I'm not really betting consumer staples, but financials, I'll be still paying very close attention to and including it as part of my weekly rotation. That is the main takeaway from all of this. I mean, I guess you guys want me to talk about Robinhood. You guys always want me to talk about Robinhood. No change in price action, right? Still towards the lows. However, Robinhood now is at a decent valuation, right? So I'll just redo this here at about $70. It's not going to be wildly different, but just in terms of forward multiples right now, it's at a much better deal. I mean, it's obviously still very much correlated with Bitcoin, but keep in mind, now it's trading at a 27 forward price to earnings, 27.24, but who's counting? And they're growing their EPS at about 22% per year, which is the street estimate. It gives it a 1.24 peg. This is much more manageable than it was all the way here at 150, right? Clearly. So Robinhood, for the long term, not too bad. Short-term price action, tough to say if this is the true low because let's just be honest, right? Robinhood has just followed crypto too closely for some people's liking. I mean, it's a carbon copy. This chart is just a carbon copy of Bitcoin, right? To a certain extent, higher beta perhaps than Bitcoin, but you know, Robinhood's going to need a few things if you want it to really rally It's going to need crypto. It's going to need all of financials. However, for those of you that have been holding back and wondering whether or not it's a good proposition to be maybe accumulating some shares at these lows for the long-term portfolios, if you missed out on last year and you were wondering if it's a good buy, it's not a bad buy. It's just that it's going to be a little bit volatile, right? I'd rather put my money in Robinhood at the current valuations than in Adobe personally, if we're looking for plays that are the downside. And the same thing for new holdings, right? I'd rather put my money in new holdings, which is growing revenue EPS at fantastic clips at a super low valuation right down there. Some of these fintech names have arguably been as out of favor as some of the software names. I would rather do some of these fintech names, if I'm completely honest, than software. So Robinhood, new holdings, not bad. Not bad, but obviously I'll keep you guys in the loop with every single daily video update. That's everything I had for you guys today. And once again, as a conclusion, one day's worth of bounce isn't a trend, but it does establish tradable local lows on many companies that we've been over. And what it does help us view as well, the main takeaway is not, saying, is this the bottom? Is this not the bottom? What you should take away from this is the fact that you have tradable lows on certain stocks that have better price action than others. In other news, for long-term portfolios, it's still a great condition to buy just because you missed the recent bottoms of yesterday. Many of these prices, even though Meta's up 6, Microsoft's up 3, they're still down tremendously. So we should still be looking to accumulate further positions for our long-term portfolios. But last and most importantly is focus on the names that had great strength into the conflict that got unwound because of the conflict. Now, what we were seeking to understand was, on the other side of the conflict, potentially, is that still where the market wants to be, or does the market want to be someplace else? Well, from what we see from today's price action, at least, it does show that the themes that we've been talking about since January are still the themes that the market wants to bid when times are good, at least bid with the fastest velocity. And you guys know velocity of money is very important, right? So that's everything I had for you guys today. Hopefully you enjoyed. Hopefully you learned a couple things. And that being said, if you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We'd love to have you back. And last but not least, if you guys have any questions or comments, or if you guys are looking to play anything on your own, definitely leave it down below in the comment section. And I always love reading your guys' comments, and I'll get back to you as soon as possible. Last but not least, if you guys were interested in joining a trading and investing community with over 350 other members, if you guys are tired of trading and investing in the markets all by yourselves and you wanted to do so with me and our beautiful investing and trading group, the link to join us is down below in the video description. You get access to many things. Number one, all of my trades, whether they're long-term trades on small caps or legacy large cap names for my long-term portfolios, and any trades that we do on a daily basis, especially premium farming, wheel trades. We do so many wheel trades every single week, selling premiums under the markets, but also, depending on the market conditions, right, many directional trades as well. Call debit spreads, leap call options, things of that nature. So you guys get access to all my trades. You also get access to our private morning live streams. Every morning, Monday to Friday, I stream for the group for about 2 hours, 3 hours at a time. First, we trade the markets live, and then I take all your questions on your stocks, your options, your long-term portfolios. And that's where it's the best time to ask me some questions on everything, because I can reference the charts in real time, and I can also reference fundamental valuations or sentiment issues as well. And at the same time, you get access to over 15 hours of private education content, deeper trading strategies that I don't go over on YouTube, but also how I do fundamental analysis, technical analysis, how to build a trading portfolio, how to build long-term portfolios. So much education in that section. And last but not least, you get access to all my charts. Whenever you see these charts with support resistance levels that I update as frequently as they change, essentially, and all the fundamental breakdowns, I do this stuff, either support resistance or a combination of fundamentals, on like hundreds of companies across this watch list. You can copy all my charts and all my watch lists. It's very easy to do, takes like 15, 20 seconds, and it's just an added bonus. So if you were looking to take your trading or investing up a notch, and you wanted to join a community that trades and invests in the markets actively every single day, you may consider joining us. Once again, the link to join us is down below in the video description. And if not, I guess I'll see you right back here on the channel, guys. Pleasure as always. Love you guys. Thank you for all the support, all the comments, all the likes, all the subscribes. Looking forward to doing many more videos for you guys in the future. That's it for me. Have a good day in the markets. Take care. See you tomorrow. Peace.